somehow trades hit stop loss. That's our trade on USD CHF. Okay, so let me just go to USD CHF. Okay, so as you can see, USD CHF, look at the pattern I had saw. Okay, I saw this pattern when I had already entered buy trade here. Okay, so I was thinking the market will come here, so we get out as soon as possible. And you can even remember that I modified my take profits from around here to around here because I discovered that this is now a pattern. Now these are some of the effects of trading the patterns. Okay, so it's better to stick with your strategy. It's better to just stick with allowing the market commit to you before following. So I was hot here because I entered this trade and then they hit stop loss. One of them hit the stop loss, and the other one I quickly had to cut losses because I didn't want the loss to be too big. So now we see that it has broken below the pattern here, and hopefully it's going to retest and then sell. Okay, and apart from it retesting and selling, there's another possibility that it's going to follow this pattern you're seeing here. Okay, you can see this line, this. Okay, there's a possibility that it's going to follow this pattern and keep selling. There's a possibility that it's going to break and retest and sell. Okay, let me just draw a Fibonacci level from here to here. So this is what happens, guys. Sometimes when the market is trending very powerfully or very strong, sometimes it doesn't hit the 61% or 50% retracement. Sometimes it just hits the 38% retracement. Okay, so that happens sometimes. Okay, but the most sure levels are 50 and 61%. But sometimes when the market is trending strongly and then it hits the 38%, you see that it now just continues going. Okay, because of the strength of the trend. Now, as you can see now, for this guy, I took the Fibonacci from here to here, and you can see that this is exactly 38.2%. Okay, so that's what I'm saying. Sometimes it doesn't hit the 50%, sometimes it just hits 38% and starts going. And of course, 38% is also a Fibonacci level. So this is what we are seeing. And from our daily, we can see that this is most likely going to be a buy because we can see that it has broken below our previous day, and dollar is really weak right now. Okay, it's most likely going to be a buy. Okay, sorry, a sell, not a buy, a sell. Okay, but entry now is very important. It's better not to enter and get hot. So entry is very important, and we'll see how it goes. If it's going to maintain this pattern, I might just enter for a sell. Okay, I might just enter for a sell, maybe using a tiny lot size like 0.01. Okay, and we'll see how it goes. And I actually entered another trade on GBP CHF. Remember, we had a trade running and we were taking out around here, so the market retraced to this point. And if I draw my Fibonacci from here to here, you can see that it came and touched the 50% and almost touched the 61%. Okay, so we had a buy order waiting here, but it didn't get triggered. So we entered another one. I entered another one here. Okay, I entered another one here because I saw some sort of break in the counter trend line. Okay, so this was a break in the counter trend line. I was supposed to have entered after a retest, but there have been little retests, so I was skeptical about the bigger retest, which might not happen and which might make us enter at a bad price. So that's why I entered here, but I still have this order here at 0.01 because I still haven't risked up to 3% of my account, even with entering this trade, even if it touches my stop loss. Okay, so if it still comes here and triggers this one, it's still going to be a good thing, and we'll just keep buying it. And I am more than 80% sure that this trade will buy. Okay, so this is a good place to enter, and we're going to take our profits here. Here for this one, the profit is $20. That's for the trade I entered. So we're going to wait to see what happens. We see that we're already in profit. Okay, so for these other ones, I'm going to be really skeptical before I enter any other trade. We can see Euro NZD. It came and tested this level and started going up, and then started retracing again. So let me just do this. Let me just draw this trend line properly, so we can see that we have a trend line here. And what I will be doing now is I'll draw another trend line here, because I know it's going to go up. So if it crosses above this trend line and retest, we'll enter for a buy. If it crosses below this trend line and retest, we'll probably enter for a sell to continue selling. Okay, because we can see that there has been heavy selling. Okay, the market is in a very strong downtrend, and if we take our Fibonacci from here to here, we'll see that we're actually at a 61% retracement. So selling this market might be a bit risky. Okay, selling this market might be a bit risky. So we'll be looking to buy if we see a break in this structure, in this trend line, and retest. We'll be looking to buy. And of course, you see that it's part of the bigger pattern, right? It's part of the bigger pattern, so it will be good to buy. Our selling will only come when we cross this major trend line. Okay, so we won't sell even if you cross here. We'll sell when we cross this one. Okay, but presently we'll be looking to buy if we cross this if this trend line and retest this particular trend line and retest. Okay, we don't want to do things too rashly, because I want to kind of stick to the strategy and so on and so forth. So for AUD USD, we can see that we have a buy here. The market is buying presently. We have a buy here. If we take our trend line, our Fibonacci, and draw from here to here, we can see that this is around 50%. And of course, what we analyzed yesterday was that, let me just delete this guy. What we analyzed yesterday was that this was the counter trend line, right? And then it broke it very perfectly, and now we are looking for a retracement to the counter trend line before we buy. So our analysis still holds for this one. We're not buying except it comes and retests the counter trend line. Okay, so it's possible that we see this happen till next week. Okay, maybe on Monday or Tuesday we'll see this happen. Okay, but if the market is very volatile today, we'll see it happen even today. Okay, so that's it for this one. And which other one? And GBP USD, I see GBP USD buying. I see GBP USD buying. Let me just close this guy. Okay, but I'm also skeptical about GBP USD, because we are at a major, not major though, but we are at a quite decent resistance level here. So you can see that the market came, tested here, cross, tested, and tested, and we are currently at the level. So I'm quite skeptical about the buying. Maybe it's going to retrace before buying, I don't know. Okay, so we can see that there is a bigger pattern here. There's a bigger pattern here, and it's possible that the market might just retrace like this, then come on buy at this point. Okay, so if it retraces, what we'll then do is we'll draw a counter trend line from here to here. That's from this point probably to where it's going to retrace to, and then when it breaks the counter trend line and retests it, we'll now enter a buy. Okay, that's because of this pattern we are following right now. Okay guys, so what for gold? I also entered the pending order for gold, and we can see that this is the major pattern, right? This is the major pattern, and hopefully before gold reaches here, gold will come and trigger our trade on the 61% retracement. Okay, and that's what we are waiting for. But we're not going to rush, we're not going to sell right now, we're not going to buy right now, we are only going to wait for a retracement. So it's very important, guys, to always wait for a retracement. Now you see this guy is coming, is going below, is going probably to come and test our buy order here, to come and trigger our buy order here. Okay, so basically these are the trades I'm looking. These are the trades I'm looking so far, and hopefully we'll see what happens. And it's actually risky trading these smaller patterns. Okay, these patterns are very small. You can see this one is quite tight. Okay, it's getting very tight. It's quite risky trading them because it can blow up to either the upside or the downside, and depending on where it goes, if you're in its wrong direction, you have to use a lot of stop loss, you have to risk a lot, okay, in pips to be able to sustain or to be able to survive the move. Okay, so it's quite risky trading these kinds of setups. But again, if we are going to look properly, we'll see that apart from it being a pattern like this, or apart from it being it being a selling pattern like this, we can see that again, guys, when you put this guy here, that's this line here and this line here, or probably this line here and a trend line here like this. Okay, we can see that now we had a triangle and we broke below the triangle, and now it's retesting. Okay, so you could see that this is a good opportunity to sell. It's possible that it's a good opportunity to sell also. So what if we sold here? We sold here and our stop loss is 96 pips. It's still not up to 10% of our up to 3% of our capital, right? It's not 3% of capital, because 3% of our capital will be a $30 loss, and this will have just been this particular one will have just been a $6.7 loss on a 0.01 lot size. Okay, so guys, it's possible to just do this. Okay, maybe I will just enter for a sell, because the market is really selling. It's really going against USD. Let me just look at TradingView and see the charts from TradingView. Let me look at TradingView. Okay. So guys, I really feel this is a good opportunity to sell. Okay, I really feel this is a good opportunity to sell. Okay. Really feel this is a good opportunity to sell. And I think I'll just enter a sell. Okay, I'll enter a sell, but with the least risk. Okay, that's with 0.01. So just enter the sell, 0.01. So let's see how it goes. For the stop loss, we could, now this is the good thing with risking very little. Okay, you can place your trade and sleep at night. Okay, you can practically place your trade and sleep at night. You won't be worrying that you lose more than you can afford to lose. Okay, so that's, and of course, if you want to do that, you definitely want to have enough capital, right? So that's why trading needs money. You definitely want to have enough capital, because if you do not have capital at all, you are really going to be deceiving yourself, and you won't be able to trade like this. You won't be able to risk very little and still make some quality money. Okay, yeah, so that's it. So let's see how it goes. If it retraces to a good level and I see another sell opportunity, I might as well just sell it again. I'll just adjust this other sell limit to this point. So guys, I'll stop recording for now and we'll come back later to check our trades. See you in the next one.